All right, welcome everyone. It is 7 o'clock now, so we're going to get started. All right, first off, I would like to introduce myself. My name is Allison Heavens. I am one of the home financing advisors in the Lambton-Kent Middlesex region. I'm joined tonight by my colleagues, Cecilia from Waterloo and Mike also from Lambton-Kent Middlesex. From everyone at Libro, thank you for taking part in tonight's seminar. This webinar is designed to help you, first-time homebuyers, get the answers you need to feel confident entering the real estate market for the first time. First, I'll go over a few housekeeping items. First and foremost, you do not need to worry about muting your mic or turning off your camera. We can't see or hear you. That being said, this webinar is your forum. Please feel free to post questions and comments in the chat. The webinar is meant to be interactive, so please ask questions. Don't be shy. I guarantee someone else has the same question as you do, so ask away. We will be stopping a few times throughout the presentation to tackle some of your questions. The information provided in this webinar will be general in nature. Any specific questions may receive a response asking you to reach out to your local Libro. It's not that we don't want to answer your question, quite the opposite. It would just be better to answer one-on-one with a coach so that they can fully understand your situation as opposed to it being in a public forum. Finally, if you will have to drop off the call early, not to worry. The webinar will be recorded and shared on libro.ca in the following weeks and in the follow-up email that you will receive. Many of you joining us tonight may already be Libro owners, but for those of you who are not, here's a little bit about us. Libro Credit Union is a financial cooperative with 36 locations across southwestern Ontario. We have over 110,000 owners and over 700 employees. In 2018, Libro was proud to become a certified B Corporation, joining leaders of the global movement of people using business as a force for good. Certified B Corporations, or B Corps, meet higher social and environmental performance standards, transparency, and accountability. Libro has a purpose-based business model. What does that mean? It means that we have a purpose beyond profit, thinking differently about how we conduct our business and making decisions that positively impact our owners, our communities, and our staff. Instead of doing good things once we've earned a profit, we earn a profit by doing good things. It's an approach that goes beyond earning a profit, and it means we consider a triple bottom line: people, planet, and profit when making decisions and building strategies. I encourage you to check out libro.ca for further information on the credit union and Libro's work, as well as more details about what it means to be a B Corporation. Now, enough about Libro, or about a B Corp. Sorry. Here's a brief overview of the topics that we will be covering tonight. Up first, Mike will be going over the pre-approval process, credit scores, and mortgage types. Cecilia will be giving you some information on down payment requirements and options, and some tips on how to save for your down payment. We will then take a quick break to answer some of your questions. We will cover various programs and incentives available to first-time homebuyers in the first half, or in the final half. We will also cover closing costs and give you more information on the home buying process. We will then close out the night with another Q&A at the end. We will discuss the fantastic contest we have for you guys. I'm going to hand it over to Mike to start us off.
We want to make owning your first home a reality, like we did for these owners, the Wong family. Pre-approval. So let's talk about the pre-approval process. A pre-approval takes place prior to you beginning your home search. A home financing advisor will gather various information about you, such as your income, your credit score, how much you have for a down payment, to determine a price point for you to begin your house hunt. A pre-approval is important to uncover any obstacles that you might face in that application process, as well as to ensure that the home you're looking at is affordable. Although pre-approvals are not required to actually make an offer on a home, many realtors will insist that you obtain one prior to your house hunt. Now, what is a pre-approval and how does it work? Well, getting pre-approved for a mortgage means you know exactly what you can afford. It also signals to your real estate agent that you're serious about buying and are ready to make an offer when you find a home that you love. What does a home financing advisor look at to get someone pre-approved? We will need 3 months proof to show you've had your down payment on deposit for the last 90 days. And depending on your employment situation and where your down payment is coming from, we do require different documentation. For example, self-employed individuals will require additional paperwork as well, but your Libro coach will let you know what documents make sense for your life. Unlike other banks, Libro can still give you a better mortgage rate beyond the 120-day pre-approval process. We will calculate backwards from your actual closing date and give you the best rate possible. This is something unique to us, and we're very proud to offer that. Now, Libro's rate guarantee. If you plan on purchasing a new build, we do offer a 1-year rate hold on carry-on mortgages. A rate hold of this length means we offer you the same mortgage rate on day 1 of your pre-approval as day 365. New construction condos have a posted rate guarantee for 18 months. That posted rate will have a 0.3% premium if you were looking for that to be extended to 24 months. Now, all builders in Ontario must be registered with Tarion to be built legally, so this applies only to Tarion homes. Now, credit scores. Your credit rating is a record of your financial history. So credit reports are available in Canada for free from Equifax as well as TransUnion. The credit score ranges anywhere between 300 and 900. A good credit score is usually between 660 to 724. Between 725 to 759 is considered very good. If your score is low, it's worth taking the time to improve it before you apply for a mortgage. Your Libro coach can help you with strategies on how to improve. We're open about this score with you and use it as a tool to help you improve your financial resilience and for future planning. Banks, by contrast, won't work with you on this. A credit score is an important piece of any credit situation. So if your down payment is less than 20%, there are some situations where a minimum score is required. Now, what affects your credit score? Well, as they say, no credit is worse than bad credit. It's good to use a credit card to purchase the things that you would normally buy and pay them off quickly. Paying your bills on time has a large impact. If you're constantly paying late, your credit score will be negatively impacted. So this includes cell phone bills. They will have an impact on you if you are not, in fact, paying them on time. Now, if you're also carrying a high balance on a credit card, even if you pay that off on time, that can also negatively impact your score. So can closing an old credit card account, even if you were paying it on time, because you no longer have access to that credit. Switching too often between credit cards can also have a negative impact. Here again, having a conversation with your Libro coach about all things related to your credit score can help.
A down payment is the amount that you put down on the price of the home from your own funds. You borrow to cover the rest with a mortgage. If you have less than 20% down payment, this is called a high ratio mortgage. You are required to get extra insurance through the Canada Mortgage and Housing Corporation or SAGE. The premiums can be high, but for many first-time home buyers, they are worth it. The minimum down payment required for mortgage loan insurance depends on the purchase price of the home. For a purchase price of $500,000 or less, the minimum down payment is 5%. When the purchase price is above $500,000, the minimum down payment is 5% for the first $500,000 and 10% for the remaining portion. This is only for properties with a purchase price below $1 million. I have an example of this calculation in the next slide. If you have 20% down payment or more, you will have a collateral mortgage, and mortgage insurance is not required. Here is a high ratio mortgage calculation example. If you were buying a property for $750,000, the first $500,000 would require 5% down or $25,000. And the remaining $250,000 would require 10% down or another $25,000. So your total minimum down payment will be $50,000. The common sources of down payment are savings. You have been saving for your down payment and the money is in your account. You'll be asked to bring 3 months worth of bank statements showing that the balance has been on deposit for 90 days or longer. If the funds have not been on deposit for that loan, you will need to show the source of funds. For example, if they are the result of an income tax return, you could bring your notice of assessment to show the refund. If you have transferred funds from one account to another, you may need to show a record of the money leaving one account and arriving in the other. Another source of down payment is a gift. A trend for many first-time home buyers is a gifted, non-repayable down payment from a close relative, typically parents or grandparents. The borrower and the giftor must both confirm that the down payment is a gift and repayment is not expected. Another common source of down payment is investments. You could use an investment as a source of your down payment. Same rules apply around the 90 days on deposit. We will discuss more about this with the RSP Home Buyers Plan and First-Time Home Buyer Incentive after our first Q&A period. Saving for a down payment. Please talk to us well in advance before making an offer on the home. We can work together and figure out how much you could afford to purchase and what makes sense for your lifestyle. From there, we'll figure out what those monthly payments would be. Then, have you live off of that amount and save the difference. You'll be used to your payments and starting to save. That way, when you find your house, there won't be a sudden adjustment to your budget for affordability. You'll be feeling calm, cool, and comfortable.
When it comes to understanding different mortgage types, there's two main terms you'll need to learn: variable and fixed. A variable rate mortgage can change because the mortgage rate is based on the prime rate. When the prime rate changes, it affects your mortgage rate. So variable will also be the prime rate plus the rate offered to you. Now, the prime rate has been frequently changing in the past few months, as you've likely heard about this in the news. Now, a fixed rate means your rate is set for the entire term of the mortgage. You'll always know what your mortgage payments will be and how much of your mortgage will be paid off at the end of the term. So it will be one number. There are also open and closed mortgages. So open mortgages can be paid off at any time without penalty. Open mortgages provide the greatest amount of flexibility. Note, a rate premium may be applied for that flexibility. Now, closed mortgages can offer a lower rate overall, yet this type of mortgage cannot be paid off early without facing a penalty.
All right, we will now take some questions. So we've had a few roll in, so let's see here. I'm not sure if I can afford a home. Should I talk to someone? How do I know? That's what we're here for. That's what we do. it's tough to know. There's a lot of different parts of qualifying for a home. There's, what should my down payment be? What does the mortgage payment look like? And I quite often like to say there's quite often a difference between qualifying for a mortgage and paying for a mortgage. And making sure that it works with your budget and your lifestyle. So if you're not sure if you can afford a home, go talk to an expert. Get a pre-approval, start working through that process. Maybe you need to save more, maybe you already have enough. You never know until you ask the question to someone qualified to give you the answer. So maybe Cecilia, if you wouldn't mind answering, how do I know if I should go with fixed rate or variable rate?
This is a very important question, and depends on each person, right? And how much risk are you willing to take? Because fixed rate, when you go with a fixed rate, we're gonna keep the same rate for the term that you choose. Can be 1 year, 2 years, 3 years, 4 or 5 years, but you're gonna keep the same rate. But if you go with a variable, and with the rates increasing right now, if the prime rate goes up, and then your rate will go up too. It's a very particular question, and it will be nice if you can come to us and talk to each of the coach and have that discussion personally, like, so we can have more examples and we can explain you more and see what will be the best mortgage type for you.
All right, and we have a question here from Emily asking, do you have to renew your mortgage every 5 years? You do have to renew your mortgage, but the year can change. So there are a number of different terms for the length of terms. It's anywhere from 6 months, and at Libro we go up to 7 years. Some places do actually offer a 10-year mortgage as well. Now, the length of the term often influences what the rate is, but you do have to renew your mortgage at the end of each term, whether that be 3 years or 5 years. And your institution at Libro, we call you on your anniversary, your 1-year anniversary, 3-year anniversary, I believe it is, and then as you're getting closer to your renewal date as a reminder, because there are some things you can do at your renewal, like put lump sums down on the mortgage, things like that, and we want to make sure you take advantage of them. All right, we have another question here from Matthew. Can you switch between closed and open mortgages at renewal? Maybe if Mike wants to take this one, just because you had talked about open and closed mortgages.
Yes, thanks, Allison. And it sort of piggybacks on Allison's answer a bit there. So once your mortgage does in fact come up for renewal, it completely opens up. So you're able to do a variety of things at that point. You could potentially pay off your mortgage if you were in a position to do that. You could renew short-term, long-term. So everything opens up at that point in time. So think of it like almost starting over, so to speak. So when you purchased the home and you got a Libro mortgage, you selected a term. Well, at renewal time, you're going to do that again. So definitely you can make that switch from fixed to variable. And those are great conversations to have one-on-one with your coach, depending on your life stages and what is your next move. Are you planning on purchasing another home? We can get into all of the details on that, but definitely the short answer to that question is you can switch.
All right, and we have another question here. How do I plan for a future expense when my current income isn't there yet? This is at least something that I have had this question quite a lot lately, whether it be somebody, young, just finishing up school that wants to buy a house, but they're either haven't found a job yet or they're just starting out. whatever it may be. And that's exactly where you need to say book an appointment with a Libro coach, because that's where planning becomes important, and saving and having a plan in place to save, but also having a goal, developing a goal to help you understand where you're getting to. So when you don't, future expenses are going to come up at any time, especially if you're owning a home. From what my personal experience is, you're never done paying for a house, even if once the mortgage is done, there's always things that come up. So financial planning and having a solid plan in place, and working with an expert is going to help you with that. So Sienna has asked, do you have to have your total down payment for 3 months prior to making an offer or prior to getting a pre-approval? All right, so you don't have to have your total down payment for 3 months. So say, for example, you're saving $500 a month, and you come to us now and we're looking at getting a pre-approval, or you're just asking some questions, maybe it's not a full pre-approval, but you're looking at buying a house 6 months from now or something, something like that. You're obviously going to be saving a fair chunk of money over the next 6 months. So we do also look at accumulated savings, and we do look at anticipated savings. So, and also in the case of a gifted down payment, that would not be in your account for 3 months because it's coming from someone else. So we have other ways that we verify the source of that down payment. But generally speaking, we do at least like to see a trend of savings over at least 3 months. Okay. Sam has asked, how does my level of income affect my pre-approval amount, even if I have saved the complete down payment? I just started a high-paying job. It's great that you saved, but yeah, so we at Libro, depends on the scenario of starting the high-paying job. That's definitely one you would want to talk to your coach about, because it can depend. It can depend, if you're just coming out of school. It depends if you've just moved up in your same industry. There's a number of things that can affect that. So you definitely want to talk to a Libro coach and have them review your scenario. All right, so we are going to move on now. All right, so start thinking about your questions for the second Q&A coming up in a little bit here. If you are a first-time homebuyer, the Homebuyers Plan could help you. The Homebuyers Plan allows you to withdraw from your RRSP tax-free for the purchase of your first home. There's a few criteria you should be aware of. The maximum withdrawal amount is $35,000 per person. The contributions must have been in the RRSP account for at least 90 days. Withdrawals can be made up to 30 days before or after the date you take possession of the home. And you have 15 years to repay the loan starting 2 calendar years from your purchase. 1/15 of the amount will be added to your taxable income if you do not repay the loan within 15 years. In contrast, some RRSPs, such as group RRSPs, most often available through work or employers, do not allow you to withdraw funds from them. This program is also available for homebuyers who've experienced a breakdown of a marriage or common law relationship. The First-Time Homebuyers Incentive helps people across Canada purchase their first home. The program offers 5 or 10% of the home's purchase price to put towards a down payment. This addition to a down payment lowers the mortgage's carrying cost, making home ownership more affordable. The incentive would allow eligible first-time homebuyers who take the minimum down payment for a high-ratio mortgage that Cecilia covered earlier to apply to finance a portion of their home purchase through a shared equity mortgage with the Government of Canada. It's an incentive amount of 5 to 10% of the home purchase price put towards a down payment. These are a few criteria to determine if you are eligible for the first-time home buyer's incentive. Your total annual qualifying income does not exceed $120,000, and your total borrowing is no more than 4 times your qualifying income. You and your partner are first-time homebuyers. You are a Canadian citizen, permanent resident, or non-permanent resident authorized to work in Canada. You meet the minimum down payment requirements with traditional funds, savings, withdrawing or collapsing a registered retirement savings plan, or a non-repayable financial gift from a relative or immediate family member. Your mortgage must be greater than 80% of the value of the property and is subject to mortgage loan insurance premiums. It also must be eligible through CMHC or Sagen, which are the high ratio mortgage insurance providers. Talk to your Libro coach. They will guide you through this process and provide you with calculations and recommendations. This shared equity mortgage with the Government of Canada must be paid back when the value of your home increases or decreases. You pay back the same percentage of the value of your home when you sell it or within a 25-year window. It works like this. You receive a 5% incentive of the home. You receive a 5% incentive of the home's purchase price of $400,000 or $20,000 in incentive. If your home value increases to $500,000, your payback would be 5% of the current value or $25,000. If your home value decreases to $300,000, you would pay back 5% or $15,000. Purchase Plus Improvements makes it possible to get an insured low down payment mortgage that covers the purchase price as well as the cost of repairs or renovations. Buy that fixer-upper at a great price and turn it into your dream home, and do it all with one manageable mortgage and a minimum down payment. Step 1, talk to your coach. Quotes are required at the time of application submission. This is important to keep in mind if you would like to partake in this program. The offer to purchase should be negotiated with a financing condition of obtaining a purchase with improvements mortgage. CMHC or Sagen's appraisal system confirms the cost of the improvement costs are reflected in the as improved value after completion. Step 2, funds are not released until the renovations are complete. The buyer should be prepared to pay for it out of pocket and then be reimbursed. Many institutions require a lawyer to handle the disbursements of funds, whereas Libro handles everything in-house. This results in money getting to the buyer faster. Note, the down payment is based on the purchase price plus renovations. Example, a $400,000 purchase price requires a minimum down payment of 5%, so $20,000. If the house requires $20,000 in renovations, the down payment price would become $21,000 or 5% of the purchase plus improvements price of $420,000. At completion, the $20,000 to pay the contractor will be advanced. You do not get this money up front.
Finding a realtor. A knowledgeable real estate agent will have detailed knowledge of your local housing market and help you avoid delays and costly mistakes. There can be a lot of jargon involved in a real estate transaction, so you do want to work with a professional who can speak the language and translate it to you. They may help you evaluate all active listings that meet your criteria, alert you to listings soon to come on the market, and provide data on recent sales. Asking friends, family, and colleagues for recommendations is definitely a great place to start. Selecting a realtor is like getting matched on an app. You want to find someone who is a good fit for you and understands your needs and wants. You'll want the realtor to stay focused on the issues most important to you when emotions are running high. Every member of the Ontario Real Estate Association of Realtors must adhere to the Code of Ethics, which is based on professionalism. serving the interest of the clients and protecting the public. They are there to stand in your corner during negotiations and are there to represent you during the transaction. Home appraisal and inspections. A home appraisal is a valuation of the property that you intend to purchase after the offer is made. They're needed for the lender to confirm the value of the property for mortgage purposes. Now, a home inspection, that's different than an appraisal. A home inspector will look through a home for visible faults, flaws, substandard systems requiring major repairs or upgrades. So this would be part of putting an offer in with an inspection clause. This helps protect you from the unknown issues in a home that you're wanting to purchase. Why? Well, how many home buyers climb up onto a roof, crawl into an attic, and examine wiring? How many would necessarily know what they're looking for? Hire your own inspector, go with them for the inspection. You will learn so much about your new house. Fees can vary with this type of report. Often the inspection pays for itself because it allows for repairs to be negotiated within the offer. Your report will be full of maintenance information as well. Often realtors can actually give you great referrals to home inspectors. Speak to yours to find out more. An important point, if you go on an offer without a home inspection, you do need to know that there are risks. So please talk to your realtor and your Libro coach about this so you're prepared and informed about all of those details. Lawyers prefer to review the offer before you sign. You pay for a lawyer's services because they are experts and will guide you through the following process. So your first meeting, you'll discuss the title, how to hold it, insurance, the money required to close, keys, and responsibilities of the purchaser. Your lawyer will help with eligibility for first-time homebuyers' tax rebates and closing fees. They'll also know best about the amount on closing fees. At the second meeting, they'll explain and sign documents after acceptance of your offer and explain how to deliver your money a few days before the closing date. After this could be a good time to discuss a will. Some estate planning is a good idea now that you're a property owner.
Closing costs are approximately 2% of the purchase price. This includes land transfer tax and legal fees. But to get the correct amount, you need to talk to your lawyer. There are rebates to help with this. First-time home buyers of a qualifying home may be eligible for a refund of all or part of the land transfer tax up to $4,000. This is a provincial rebate. To claim a refund, you must be at least 18 years of age. You cannot have owned a home or have an interest in a home, and your spouse cannot have owned a home or have an interest in a home while he or she was your spouse. Previous ownership in a home means you don't qualify for the land transfer tax first-time home buyer's refund. The federal home buyer's amount tax rebate could also allow you to claim money for the purchase of a qualifying home in the same year as well. Your lawyer will have the best information about rebates and qualifications. Anything to operate the home is included under other costs. Don't forget that having a shovel driveway and mow grass aren't optional. You'll have to buy the tools to maintain your house. Many costs can take unprepared home buyers by surprise, whether they are unexpected or unexpectedly large. Investigate, shop around, and plan to minimize surprises that otherwise throw off your spending plan. These include property appraisal, property taxes, insurance, monthly utilities, regular upkeep, and renovations. But don't forget things like utility connection and moving expenses to get you set up in your new home. We'll be providing a checklist of all the other costs to consider after the webinar, or you can find them on our website that includes all the costs on this slide. Libro Credit Union mortgages comes with a lot of benefits. We provide coaching to own your home faster. We want you to pay off your mortgage sooner. We provide profit sharing. As a Libro customer, you are an owner and you share in our profit. Banks don't usually pay their customers. We have flexible payment options, monthly, weekly, bi-weekly, and double-up payments. We have flexible term options and competitive rates. Our mortgages have rate protection. They are portable. They can be transferred from one property to another. Plus, all our Libro mortgages comes with a free premium checking account. There are new changes coming, but we'll guide you through them. The federal government, through its 2022 budget, has proposed some changes for 2023 that are designed to help the housing market and first-time home buyers. Our coaches are lending experts. They'll have all the knowledge you need on the changes when they are put in place. A recent article by the Globe and Mail signals that the housing market in Canada, and more specifically Ontario, has begun to cool a little bit. This trend could continue, as economists forecast, although no one has a crystal ball to say with absolutely certainty.
We're there every step of the way in the home buying process. A coach individually reviews each financial assessment with you and makes sure you understand how everything works. We provide better recommendations. For those that are not yet ready and need to keep saving, we help by coaching you into making that vision a reality. This makes for a smoother finish to closing when you do find that house that you love. When we then follow up for planning beyond the initial mortgage agreement to better your financial resilience. We look for opportunities for you to pay down more, as well as view all other aspects of your life. Say, for example, saving for a child. Our coaches use prosperity plans to plan for the lifestyle you want, help you make good financial decisions, and budget for the little things in life that make you smile.
All right, so we'll transition into some questions. I see a question, two questions here, and I'm going to kind of answer them, but with a bit of an asterisk on them, asking, what do you recommend if a couple is looking to buy if one person has a good credit score and the other does not? And then there was a following question about what's the minimum credit score to apply? Well, the answer to that, it depends a little bit, and that's why where the Libro coach comes in and actually sitting down and reviewing things, because when someone says they have good credit and someone's credit is poor or maybe a little bit weaker, what exactly does that mean? It may not be as bad as they think, but really sitting down and actually reviewing your situation is important. There are cases where the one borrower could potentially disqualify the application. Their income may not be included depending on their circumstances. So again, the answer does depend a little bit on circumstances. So it really does pay to meet with your Libro coach, because that is what we do. We are about giving advice and working with our owners. So I wouldn't necessarily give a blanket answer to that, because it can depend, but only after we sit down and really review it can we give the recommendation as far as maybe there's something that can be done or we maybe need to wait. But I think those are great questions and specific to the individual in terms of how to kind of proceed with that. Here's a question I think for, I'll pick on Cecilia here. With housing prices so high, what do you recommend I can do to find a way to get closer to getting a house one day?
Thank you, Mike. This is a really good question. I work in the Waterloo region where all the price, the prices of the house are like really high. There is not a straight answer to this. I like to say that I work with every single owner, and I have been working with owners for years, trying to help them save for the down payment, trying to help them, get in a house. It is hard, yes. As I said before, the market is cooling down and there is a hope there, but we cannot assure that right now until it happens. But yes, there is hope. You all can get it. Maybe not now, and maybe not tomorrow, but maybe we have to work together a little bit to save more for your down payment and to wait for the opportunity when it comes. You have to keep an eye on the market. You have to work with a real estate agent and look for houses, and especially make sure what's the type of the house that you want and what's the price range that you can afford, and start looking based on that. Right. And if you have more questions regarding to I love to speak with each person, because we all are, it's a unique situation, right? And it's like, and talk to each one and help them in this specific situation. As Mike said before, right? Like we like to treat individuals one by one and help them along this journey.
Another question I guess I can take here, and I think it's a great question, and kind of Cecilia and I alluded to how we're a little bit different. So the question being, why work with a Libro coach versus a mortgage broker? And this is a really, really good question. And I think it's in that coach piece that was mentioned there. So a mortgage broker's job is to find you a mortgage, right? They'll shop around and they'll go to various institutions, perhaps an institution you've never heard of. You could end up with a mortgage in Alberta potentially. Where a Libro coach, we work with you and tailor our advice to your situation. What is it that you're looking at? But where we take it up another level is beyond the closing date, beyond the day you get that key to your dream home, we're there after that. Where broker may be about the transaction and getting you a mortgage and getting you that, we're going to be there, like Allison said, after the first year, or probably after the second. Like, we don't go anywhere after the keys change hands. So we're always there supporting you. It's great in the good times, but actually when sometimes things don't always go your way over the course of a 25-year mortgage, we're there as well for the bumps in the road. So that's why you want a Libro coach. It's for a great rate, but it's more than that. So here's another good question. Maybe I'll pass it to Allison. Does it work the same when you're building a house? Do you still apply for a mortgage the same way?
Yeah, that's a really good question, because there's so many houses being built across southwestern Ontario right now, trying to give people places to live because there's such a shortfall right now. So this is a construction mortgage is more complex than walking in and buying a ready-made house. There are some additional steps, and sometimes it depends on whether you're buying a house from a builder or whether you're, building the house yourself. So that is definitely when you want to talk to somebody about. You want to, and having a pre-approval in place doesn't necessarily mean that it's a pre-approval for either a new built home or for a new construction, because the financing is a little bit different. For example, when you're buying a house, when you're constructing a house, there's different limitations on how much we can lend you during the construction phase. So definitely, if you're thinking either about a construction mortgage or about buying a new built house, definitely talk to someone, because it is a little bit of a different animal as opposed to buying an already existing house that you're just buying off of somebody. And to say, there's lots of questions and lots of things that you need to know before getting into that scenario. So definitely reach out to a Libro coach if that's something that you're considering.
Okay, and I think we'll take one more question. It's a quick question, and I think I can just feel that myself. The question was just centered around, is the Purchase Plus improvements only available for first-time home buyers? And the answer to that is no. It's available to anybody. The idea being is you're finding that home in an area potentially that you like. The bones of the home are good, but with some updating that you're looking at doing, you can turn it into exactly what you want. So it's not limited to first-time home buyers. That is available to everybody.
Thank you so much for attending from all the three of us in Libro. We hope this session has helped you feel more comfortable with getting started on buying your first home. A recording of this webinar will be available to all those who register by email, as well as on our website. If you have more questions, would like to talk to a coach, or are ready to get started on a pre-approval, we are here for you. To get in touch with us, you can call 1-800-361-8222. Libro Connect representatives are available from 8 a.m. to 8 p.m. Monday to Friday and from 8 a.m. to 4 p.m. on Saturdays. We don't believe in long automated calls where you are stuck on hold. You can also email service@libro.ca or book an appointment on our website at libro.ca/book-a-meeting. Have a great rest of your evening.